Welcome back, focused learners, to The Explainer. Today, I am absolutely thrilled to break down what might just be the ultimate strategy for wealth protection in today's wild economy. Look, if you've been feeling the pressure of the modern economic landscape, trust me, you are definitely not alone. We're going to dive into some incredibly compelling insights from our source material that offer a real structural solution to this macroeconomic reality we're all living through. We are talking about building an anti-inflation financial firewall, and specifically, we'll explore exactly how real estate can serve as your active, wealth-generating defense system.
Okay, let's dive into this. The painful, everyday reality for so many of us right now is the relentless structural upward march of the cost of living. Groceries, utilities, housing, it's all going up, right? But paychecks? Well, they're largely stagnant. It's a squeeze. We are all feeling it. And honestly, it's a structural issue in our modern economy that desperately requires a structural response.
It really is a constant, exhausting battle, isn't it? You have the rising cost of living on one side, just clashing against a completely stagnant paycheck on the other. Inflation is basically this invisible tax that's silently eating away at your purchasing power. When your income doesn't scale with the basic cost of your daily needs, your actual real-world wealth is actively shrinking every single day you do nothing. It is literally an invading force on our daily lives.
Section 1. Inflation-era salary crisis. The invader at your gates. So, if inflation is this invading force, what we absolutely need is a structurally sound financial defense.
Section 2. Real estate's dual advantages. The foundation of your fortress. This is where we stop just talking about buying a house and start looking at rental real estate as a dual-engine machine that actively builds your financial castle.
You see, hope is not a strategy. You can't just sit around waiting for prices to magically drop or your boss to double your salary out of the goodness of their heart. You need a fortress, and the first engine powering this fortress is passive income, or cash flow. We're talking about stable, monthly funds generated consistently from renting out a property. This isn't some theoretical, on-paper wealth. This is real, tangible cash hitting your bank account every single month. It's the absolute lifeblood of this entire strategy. Think about it. Unlike static cash savings that just sit in a bank depreciating and losing value to inflation, passive income is a dynamic asset. It produces a continuous living stream of capital.
Now, what's really interesting about this is exactly how that passive cash flow works tirelessly for you as your very first defensive wall. It's fighting on three different fronts. First off, it actually pays for the asset itself by covering the mortgage. Just let that sink in for a second. The tenant is effectively buying the property for you over time. Second, any surplus cash can be used to maintain your daily living expenses, which directly combats that rising cost of living we were just talking about. And third, it provides capital for reinvestments. That means you can expand your fortress and make your overall financial position even stronger.
But hey, cash flow is really only half the story here. The second engine of this strategy is the physical asset itself. While your tenant is busy paying down your mortgage, the physical value of the property is growing over time alongside regional development. This creates real long-term asset accumulation. Basically, just by holding onto the asset through time, as the neighborhood develops around it and infrastructure improves, your fortress automatically upgrades itself. You are accumulating true physical wealth that, historically speaking, trends upwards.
Section 3. Your anti-inflation moat. The pass-through mechanism. All right, let's shift gears a bit, because this is the core intellectual payload of the Explainer. This is where we look at the natural defenses that make this entire system so incredibly effective against inflation.
So, how exactly does this system fight inflation? Well, the source material lays out two absolutely crucial steps for this pass-through mechanism. Step 1. Rent adjusts upwards to match rising prices. When inflation hits, literally everything gets more expensive, right? And that includes rent. As a landlord, you can adjust rents to match the market, which perfectly protects your real yield. Step 2. The real value of your debt actually shrinks. This happens because while your rental income is scaling way up with inflation, your mortgage balance and that fixed monthly payment you send to the bank, they remain exactly the same.
So the crucial point is perfectly summarized right here from the analysis, using future thinner money to pay off past fixed debt. Take a second to really process that, because it's a bit of a mind-bending, almost counterintuitive concept. Inflation inherently makes money worth less over time. If you have fixed debt, like a 30-year mortgage, you are paying back the bank years down the line with dollars that are significantly weaker than the dollars you originally borrowed. In a very real way, inflation is actually eating away your debt for you. How wild is that?
Section 4. Risks you cannot ignore. Cracks in the wall. Now I want to lower the temperature just a bit here.
As incredibly powerful as this system is, maintaining any fortress requires objective responsibility and a lot of vigilance. Real estate is definitely not a completely risk-free magic bullet.
Any solid financial analysis has to look at the full picture, and the source explicitly outlines these risks into two distinct buckets. On the operational side, you have your day-to-day realities. We're talking vacancy periods where absolutely no rent is coming in, unexpected repair costs like a busted water heater, and just the general labor of tenant management. Then, on the macro side, you have things completely outside your direct control, primarily central bank interest rate hikes. If you happen to have an adjustable rate mortgage, or you need to refinance at the wrong time, rising rates can severely increase your financial pressure. You absolutely have to account for both sides of this equation to survive and thrive.
Section 5. Build your financial firewall. The blueprint. Okay, let's move to the action plan and see how this all builds together.
How do we take all this amazing information and construct a defense that actually holds strong no matter what the broader economic climate is doing? Well, the blueprint relies on two massive pillars. First up, precision location. You can't just buy a property randomly. The source heavily highlights targeting areas with high employment opportunities and really easy transit. Why? Well, because those are the areas that will always attract reliable tenants. That mitigates your vacancy risks and drives that regional development we talked about earlier. Second pillar, proper management. This is exactly how you handle those tricky repairs and tenant relations efficiently, ensuring those operational risks don't end up draining all your hard-earned cash flow.
By executing on precision location and proper management, you build yourself a solid financial firewall. And this brilliantly illustrates the ultimate goal of the entire strategy, allowing you to regularly and quantifiably accumulate true physical wealth. You finally stop being a victim of that invisible tax of inflation. Instead, you position yourself in a spot where inflation actually helps erode your debt, all while your physical assets and your cash flow grow in tandem. Which leaves us with one final, very important thought. Look, throughout history, inflation in some form is virtually guaranteed. The value of paper currency naturally declines over time. But as we've seen today, your wealth absolutely does not have to decline with it. So I leave you with this question to ask yourself right now. Is your financial firewall ready to protect your real wealth? Thank you so much for joining me for this explainer. I really hope this helps you look at your own financial structure in a whole new, empowered way. Keep learning, stay focused, and get out there and start building that fortress.